using the same chart, we're going to talk about the second trade. We'll just call it trade blue. So this is going to be like your first pullback of the day. So it's going to be your pullback of the initial leg. And what you want to look for is your first move, right? You're going to fib, if it's bullish, you're going to fib low to high of your first move to your first red candle, low to high, and you're going to watch for this pullback. Now, in hindsight, it's easy to see, like the wick, boom, it came back up, right? But when these candles are forming, you can see, once we start approaching this 50, you can watch the tape and you can see the bids either getting knocked out or the buyers stepping in and picking this back up. And you want to watch them around these key levels: 236, 314, 382. So in this little range right here, this is going to be generally, and here, this is a perfect day where it shows it doesn't happen all the time. When you get a pullback between 236 and 382, you're going to continue that move. Now here's your entry points on trade blue. One right here, 50%, 618, and the 886. If you start noticing support pushing the price back up or down, whichever direction we're going, that's when you would start scaling in. So you wouldn't buy in up here. Oh, I'm going to buy in at the break. I'm going to buy in. Why would you buy in at the break? You're going to make from 270.41. If you bought the break and called the top, you're making 20 cents. If you buy in right here, you're making 80 cents. That's a 5-point move on SPX, almost a 10-point move. But anyway, you're gonna start scaling in here at the 50, right? And I'll show you an example in a second. But your three buy-in points, your two key buy-in points, are gonna be the 50%. And you're not just gonna buy it when it touches it. It's not like, oh, it touched it, I'm buying it. You have to watch the candlestick and you have to watch the tape, dude. You have to see if we're getting support here. If we're not getting support, then you're going to keep falling and you're going to be holding a falling knife. You have to make sure that you're getting the tape confirmation and the candlestick confirmation that we're getting bought up right here. And that doesn't mean we come down and touch it and then it does a tiny little bounce and now you're buying in. You need to make sure you're watching and seeing, are we getting a buy wall up here? Like if we've got large numbers coming in on the tape, then we know that buyers are stepping in and they're buying this level, just like they did here. It tried to push it down twice, which would give you your two wicks, almost a tweezer bottom right here, and then we came up. But if it falls through the 50, if it does a little bounce and then pushes back through, then our next level we're watching for is the 618. If we continue falling through that 618, then you're going to wait. But so if it comes down to this 686 level, this is a wick level that I have on the fibs, meaning it's really a 618 retracement, but we wick down to the 686. So if I see we push the 618 and we touch this and wick up, I'm buying because that's a 618 retracement, right? If we don't and we continue, this is your last line of defense before a full reversal. And almost every time you're going to get support on the 886. So your stop loss is right here. Look at your risk. You're risking this much of a loss for this much upside. If you lose, what are you losing here? 15 cents. You're losing 15 cents, right? I'm not saying blindly buy the 886, but at the same time, like, watch it closely. And if it does touch here and comes back up, it's going to be extremely fast. So you've got to be ready to buy in. Just to recap, trade blue. You're going to watch for the pullback of the first initial leg. So you're going to fib low to high right here and watch for your candlestick pattern. You're going to try to buy in at the 50, the 618, and those are really the only two. The 886 is, I would consider like a different trade, but you're still going to buy in there too, as long as if we get tape confirmation, or if you don't know how to read the tape like really quickly, then just watch the candlestick, just watch for the wick, or switch over to the 3 minute or 1 minute and watch how those candles act around those levels. But where you're going to start scaling out always, 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 always scale back at the high of day. Always. Because you're going to have buyers at that breakout point, like you did right here. Well, all those people that bought the break instantly lost right here at the next 5-minute candle. So always sell into the break. If we reject the previous high of day, we're coming down. So sell at the high of day. Don't wait and try to squeeze as much as you can, because if we touch it and come down, then you're losing that momentum in the options. So sell at the previous high at least 50% of your position, and then you can start scaling out at targets, right? 10%, 169, 50%, 618. You can scale out at all these other extensions, but 50% of your scale out needs to be at the break, and that's totally leaving money on the table for those times that it does run. But what happens in times like this, when you bought 10 contracts and sold 2, or you bought 5 and sold 1? Well, now you're holding 4 contracts and you instantly rejected. Well, you're losing premium. Since we're trading 0 DTEs, you're losing premium instantly on this down candle. So if you sell into momentum, you're collecting that premium from the volatility. So sell into the momentum, and that's the second trade, like trade blue, we'll call it.